Well, good morning. This is Tampa Home Talk, and I'm your host, Katrina Madewell. Welcome back to another Friday edition. And as always, Leo and I are going to jump into the notes for what's happening in the real estate market this week, and then we will dive on over to our guest. Good morning.
Good morning, Leo here with Barrel Engineering and Inspection, bringing you the market update at the top of the hour, every 8 o'clock hour here on a Friday.
Yes, that's become our routine here, which has been very, very good.
Yeah, and then I say, same as last week.
No, it's not the same.
I know it's not the same as last week. New listings still strong, still about 1,000 new listings a week. So if you are a buyer out there looking for a piece of real estate, you have 1,000 new choices to look for.
Let me just talk about that for a minute because, well, you know,
you're always bursting my bubble during this segment.
Well, I got to talk about what we're seeing in the market, and I tell you,
we're seeing 1,055 new listings this week.
Aside from the numbers, there, my engineer friend. You know, I have a client, like a past client. I must have had easily 5 or 6 different transactions with him, and like literally yesterday again, probably offer number 5, we now have gotten outbid again by an all-cash buyer.
So the all-cash buyers are king, basically.
Rampant.
I would love an all-cash buyer if I was selling a home. Don't have to worry about financing. Don't have to worry about how the appraisal comes back.
Let me tell you the other thing, too. Like when we first started this process, I don't know, maybe I'd have to go back and look at my notes.
You sound jaded.
To see the date, but probably 2 or 3 months ago, we did a evaluation on his property. And so, I mean, it's pretty new. He only built it like a year or 2 ago. So I went in and did a new updated comp search last night to look at what the current valuation is. And it was about $50,000 higher.
I haven't seen numbers like this since 2007.
Yeah. I mean, granted, this one's in the low 400s. So I think what we're going to see is...
Wait, you got all cash buyer at 400s?
What's what we're selling his property for. He's looking a little bit lower, but yeah, even in the 2s and 3s, we're seeing definitely the 2s, even in the 3s, seeing a lot of cash in the market.
Where are these buyers coming from that just happen to have a briefcase filled with $275,000 of cash?
Here's the thing. You know, one of our listings went active this week, and literally, I mean, here's the thing from the flip side, right? And it's just so disappointing for the buyers, but on the seller side, when we list a property, you know, and a lot of our customers, we spend several months preparing everything, getting it ready, getting it perfect. And I'll tell you, the ones that listen and like do it perfect, they always win. You know, easily 15 offers right out of the gate. And that's when we called it like highest and best, like we're not looking at anything else.
Tell me about the open house weekend. How did that end?
Gosh, which one did we do? I'm going to have to get my team in here because they did most of them. We're starting to have so many on the weekends that...
Well, there was one we were talking about last week.
I can't remember that far back, Leo.
I kept mentioning it over and over again, and it's like I was hoping to get an update on how it went.
We'll have to have Mimi let me know which one that is because I don't even know.
We'll need an update on the open house from
Look who's
Mimi.
hiding back there.
It's Adam Talley from Talley Insurance.
He's back there. We're all staring
but
at
we'll
him.
definitely have to get with Mimi during the break to find out how many offers we got on the open house. And I guess we can't say on the air what it went for.
Not yet. Not until it
she's
actually
coming here
closes.
to tell us.
What open house were we talking about last week? I can't remember. Rocky Point. Yeah. Okay.
Yeah, how did that go? How many offers?
So let me just tell you about that
contract?
one. We got a couple. It's under contract, and it went 10,000 above list.
Woohoo!
And here's what we're seeing, even when it's not cash. One of the things we're having to address right away when we go under contract is what are we going to do if we get a short appraisal? Because that's literally what we're seeing. And so we're getting things like the buyers are going to make up the difference. The buyers will pay the difference. The buyers will pay the difference up to a certain amount. And so this particular buyer said, all right, if we get a short appraisal, we will pay for it up to $5,000 above what the short appraisal is.
Oh, wow. So that's increasing the cash offer.
It's increasing our market value.
It's awesome.
And this would be a great time this week to have this conversation with one of our appraisers in the studio because they will tell you that we're seeing a lot of low appraisals and buyers are paying the difference. Like our market's never really been that. I talked to some friends of mine that sell real estate in California and they see that a lot. Our market's never really been there. This time it is. And so when people always say, Well, isn't this 2008 all over again? My answer is no, because there's too much real cash on the market. I mean, we just had fake loans, really, right? Like,
Yeah,
back in '08, like people weren't actually qualifying. There wasn't a lot of skin in the game, not a whole lot of money invested.
So you had an open house and you got $10,000 over list.
And we didn't even get that many offers on that one.
What?
Yes.
What?
We had another one that went live, and we got 15 offers when we said, okay, highest and best, no more offers. There was more that rolled in after that we had to reject. But what happened is 14, 15 offers on one property. 4 of them are cash, all cash, no contingencies.
So you throw the other 11 away.
You're not even looking at anything else.
Wait, no inspection?
No, they're getting an inspection. Okay. But we're seeing those days shorten, which is a lot of pressure on you. Are you seeing shorter hurry up and inspect? You're not seeing that?
No, we're still seeing the usual 7 to 10 window where they wait till the 4th day. So.
Oh, we're not waiting till the 4th day.
I wouldn't wait for the 4th day.
We're definitely not waiting for the 4th day, but I can tell you it feels like a lot of pressure, and I feel like, I mean, when you're in a market like that and there's that many offers, anybody that's getting financing does not have a chance. So then now your options are, if you need to get a loan, let's say your credit's perfect. You know, you're like high 700s and you know that everything is perfect. You've paid your bills on time. You've got your down payment. Your job is stable. Maybe you're putting 20% down and you're not going to have any problem whatsoever getting a loan. You can make an all cash offer even though you don't have the cash. It's just that your financing is not contingent on that deal. So let's say you lose your job. You thought it was stable and you lost your job and you've got $5,000 escrow deposit into this deal. You're now not getting it back because you lost your job. Your window is your inspection period, and that is it.
You said that's it. That's so that Adam and I go quiet.
I didn't know what to say. That's it.
That was it.
That was it. That was it.
Well, I mean, think about it.
Period.
You looked at your inspection, something happens. Now you're like, and you're counting on your lender 100%. So this is where, like, if you're making that deal, I don't care if I'm your agent, right? Like if you have another agent and you're listening to this and you're in a position where you have to make a cash offer and you're getting a loan, you better make sure that you're not going with Bank of God, because they're not going to get it done. I'm just saying. They're notorious for delays on closing, and those closing dates on that contract are a contract. You're bound by them. The seller does not have to extend by 1 day. They can keep your deposit and take a higher offer after that day.
And now to shift soapboxes for just 1 second. We'll go back to the numbers.
Let's go right on ahead. I'm not trying to be on a soapbox, but
a little bit of soapbox.
When one of my lovely clients that I've had for years, I just love him to pieces, and we have to call him again and tell him that you've yet been outbid again on house number 5 by an all cash offer when we're seeing it the same day it goes on the market. We're writing an offer within 15 minutes. It is a super strong, really tight, bulletproof offer.
So I started this segment, Adam, by saying if you're a buyer, you don't have to live in despair because there's 1,055 new properties.
I did hear that part. It did get a little sideways from there.
It did go sideways.
That was the trigger. That was the trigger.
Now I will continue.
Real quick before you continue, though, on all the cash offers and everything. I know. Well, I was just curious about it because I'm seeing a lot of new builds, especially from your team.
So that's what we're doing.
What you have to do, right? So
ultimately, I'm so glad you brought that up, Adam, because the same buyer that I'm talking about, the conversation was last night, F it, I'm just going to build. I'm just going to build. I'm going to sell my property. And by the way, we have the opportunity to go live with my girlfriend's mom, which is not ideal, right? Like, nobody wants to do that.
Suck it up for a few months, right?
I told him, I go, think about this, though. You're selling your property for, I just gave you a number that's double what I gave you 3 months ago that I think you're going to walk away with cash in your pocket. It was more than double what he told me he even wanted. I'm like, how much do you think you want? He's like, I want to clear at least $30,000. That number was more than double that I gave him. I said, I just gave you a number. It's more than double what you told me you wanted. And you have the opportunity to go live somewhere rent-free for a couple of months while you're building a property.
Debt-free,
and you can save a bunch of cash.
About to say.
Like, this is a no-brainer.
This is a Dave Ramsey special.
I know. I guess you just have to suck it up and drive
we do
drive
have
a little
guests,
bit further.
and we have to get off the real estate soapbox. So let's run through pending and sold, Leo.
So what I was going to say is, if you're happy there's 1,000 listings, and then you listen to Katrina and you're sad, it'll make you even sadder right now because there are 1,600 pending. So of the 1,000 that went on the market,
that number's almost 1,700, by the way.
Of the 1,000, she's just making it more and more depressing. Of the 1,000 that went on the market, 1,700 are disappearing from the market. 1,200 are sold. So we're still selling and putting them under contract faster than we're putting them on the market.
Yeah. And our pending numbers are higher every week, which means our absorption rate's going to get even lower. All right. If you're listening and you're frustrated
and you're depressed options, and you just want to drive off the Skyway Bridge,
we'll figure it out. We're in this together. 813-377-2775.
There's
Give
never
us a ring.
been a better time to sell your house than right now.
I'm saying amen. All right. We'll put together a plan. 813-377-2775.
Well, good morning. Welcome back. This is Leo Kane with Barrel Engineering and Inspection, joined by a very special guest. We call him Adam Talley from Talley Insurance.
He pops in whenever he feels like it.
Pops in, pops out. He's the...
It's a good thing there's a couple of us here to
Here till 8:55-ish. No, I'm just kidding. I'm here all day today, so...
Oh, wow.
We get you for the full 2 hours.
I know.
And to hold you for that, we're not going to even allow you to do your insurance tip of the week yet.
That's fine. I'm going to hold on to it.
Because
I got a soapbox to jump on, too. So
good.
Yeah, usually I'm the one that's on a soapbox.
So where's your soapbox minute for inspections this week, Leo? Nothing?
Not yet. I understand we have other insurance people in the house, too.
We do.
It's an insurance day. I love it.
But it's a different
like
kind
of
Hurricane
insurance. Day for
It's the most confusing insurance out there.
We do. So I actually got to get our guests all potted up here. You guys were shuffling around a little bit with the microphones, and I didn't want that to come through on the air. So we'll say good morning to our guests.
So it's PEO insurance?
Yeah, let's introduce yourself and break that down.
Yeah, what is PEO?
PEO.
Well,
PEO
first
is
of all,
professional.
So tell us who you are, who you work
you?
for, and give us your 30-second spiel.
So Underwriting Solutions of America was formed in 2007, and it was really formed to fill a void in the marketplace in the employee leasing industry, otherwise known as PEO, Professional Employer Organizations. And in PEOs, the core function of the PEOs is to support businesses by handling non-revenue generating tasks such as payroll, HR, compliance-related items, workers' comp insurance, health insurance, things of that nature. And we'll go into the many benefits of a PEO, but when we started back in 2007, the idea was to communicate the product directly to the business owners and explain the benefits of a PEO and why they should be using a PEO. And over the
and you guys are super affordable. We have that.
We are.
And great customer service, I have to say.
Thank you. Well, in starting out, we communicate directly to the business owner, explain the benefits of the model, why they should use PEO, the payroll processing, how it can make their company more efficient, and allow the business owner to focus on revenue generating tasks. Because when they're able to ultimately focus on revenue generating tasks, their business will grow.
So that's what Gary Keller calls your one thing, or your 20% of your efforts that yield 80% of your results.
That's right.
Pretty much, right?
Pretty much.
So let's talk a little bit about, we had Kevin and Rob on a little while back. Same company, right? Or no? You're
That's
the
right.
back
That's right.
Yeah.
They're partners in all the companies. I run Underwriting Solutions of America, which is our PEO division. The other divisions of our company are all insurance underwriters, which is a commercial MGA. We work with insurance agents like Adam to supplement perhaps products maybe they don't have to offer to their clients. We deal with a lot of unique clients, and we operate nationwide from California to New York and back. Home base is here in Land O'Lakes, Florida. I'm from Tampa, second generation, and Roy's from Tampa as well.
Yeah, there's very few of us. I would be in that group as well, but most of us are not from here. Are you from Brandon?
No, my mom's side's like Tampa for a while, like cigar factory Tampa.
Yeah.
So long time.
Yeah, there used to be a hospital in Ybor City. A lot of people were born in that one that were here from long ago.
Midwife in the house that's still standing there from 100 years ago, but yeah.
Wow, that's incredible.
Isn't one like a skilled nursing facility now, actually?
I don't know.
Still
that's
there.
A good question.
Mm-hmm.
That new hotel's opening up down there this weekend, too.
Oh, very nice.
What hotel is that?
The Hotel Haya. I had a ribbon cutting yesterday. Anyways, we're detracting from the PEOs. By the way, PEOs are awesome for people like us because they really help out when it comes to like the hard to place workers comp. And it's not necessarily hard to place by industry. Obviously roofers are really tough.
They're literally your partner, because when I was talking with Kevin and Roy, they can help you guys get stuff done that you would not be otherwise able to get done.
Well, and one of the benefits is like, let's say you have a small company, right? Some carriers, it's not that you're doing anything too risky. It's just they don't want to insure 3 people because it's only $500 a year, and it's not worth the paper
Isn't it roofers they don't like, or there's certain industries
roofers,
really
tree
like.
People, not tree people. I didn't mean like hippies, but tree people, tree people. But yeah, so difficult. But anyway,
there's a lot of different industries.
Are you talking about arborists?
It's different.
Landscapers.
Yeah.
So there's a lot of different reasons people will seek our services on the PEO side, and it could be anywhere from a 3-man roofer to a 100-man roofer, or a company that travels to multiple states, and the insurance policy is written for Florida.
Oh,
and they say,
that's
okay.
a
Well, all of a
good
sudden,
thought.
hey, I have a job in Georgia. It's a great opportunity. I'm going to go build a hotel.
Talk about that.
Sure. And they contact their agent.
Because you're bringing the perspective from the underwriting side, right?
That's right.
Okay.
That's right. So our background really is insurance. And that's how we got into the PEO industry, and that's what makes us a little different than your traditional PEO. So there's a lot of PEOs out there, but they all operate different, and they have niche markets, if you will. Some specialize in the hospitality industry, some specialize in working with attorneys, doctor's office, things of that nature.
What is PEO again? What does it stand for?
Professional Employer Organization.
Okay, got it. Okay, so companies really.
Right. So we operate as more of a business consultant to our agency partners, CPAs.
Like Adam, right?
That's right. So what Adam what he'll do is he'll send us a submission, say hey, I've got this insured, and they're a construction company, they're building hotels, they're doing the trim carpentry or the drywall, things of that nature, and they have a contract now. It gives them an opportunity to go into Georgia, South Carolina, North Carolina, and take their crews and then the current policy they have doesn't allow for that. So that gives us the opportunity to really dive into the particular account and really understand the business.
So what do you guys do in that instance, right? And we've seen that with even, Leo, you've seen that with hurricane work, right? Like there's storms at certain places, and then basically we will see some of these guys literally follow where the storm is. And you see it with the energy companies too, because the power's down and they need all the people they can get in that area for cleanup and restoration.
That's right. So where we stayed in the marketplace from a MGA standpoint, a brokerage, we work with carriers at a very high level. We deal with a lot of volume submissions, so we see a lot of different types of situations like you're describing right now.
Yeah.
A hurricane happens, the client wants to travel over to Louisiana to do storm debris cleanup. Well, there's not a lot of people in the marketplace that want to look at that type of risk because it's not a controlled risk from the insurance standpoint, and there's a lot of unknown factors that can come into play. The travel exposure, are they going to be in a safe work environment, how's their housing, and what we look at it from a common sense approach, and in a different way than that the carrier would look at it. And within our programs that we offer, we will actually take risk between the client company and the carrier. So versus the insurance company writing that company, and they take on 100% of any insurance claims that they might have, an injury, a guy that's cutting a tree limb and cuts his arm, and maybe a $9,000 premium to the carrier. Well, that could be a $55,000, $100,000 insurance claim.
Sure.
So they can't justify the risk.
Right.
So what we do is we pull our resources together. We go to an insurance carrier and we say, okay, we have 100,000 employees under our program, so that's $15 million in premium. We want to be able to have the ability to determine, hey, that's the client that we want to write, or maybe it's our own client and they're the ones that want to, they're in Florida, they're an arborist, they're cutting trees, and all of a sudden, I want to go to the storm cleanup because it's big money for them, right?
So are you guys insuring the gap? I just want to make sure I'm following you. Yeah.
So we're insuring the actual the arborist, the tree company in this instance.
So you're taking the risk that another company might not.
Correct. So
it's like pooling the risk together,
Got
right?
it.
So they'll have a bunch of arborists and all sorts of different people, all with the same carrier, that kind of helps their acceptability for the little products.
Correct. So basically,
I just want to make sure I'm tracking with you, and I want to make sure the listener's tracking with you.
That's right. So
I get it, though.
We take the
I'm
person.
sure you do, but people like me don't do insurance, and it's probably just like the person listening.
Yeah. So if the employee were to get injured, we would pay the first $100,000 or $500,000 in injuries bills at the doctor's office. So basically, we're self-insuring that client. So the tree trimmer that has $6,000 in premium, he can't obviously afford a $100,000 deductible.
Right.
His premium is only $6,000. So we're willing to step in and say, you know what? We'll take that risk because we understand that industry. We're familiar with that industry. And by pulling all of our clients together, our clients don't share risk with each other. We determine the deductible that we're going to apply to each one of our clients. But
I forget if it was Kevin or Roy that said you guys can actually work with them on a plan too on how to improve and reduce that risk and that liability.
That is correct. So, right now we're talking about a tree trimmer that's $6,000 in premium, and their ability to travel to multiple states and stay in compliance within the state guidelines of each one of those states, because each state has their own guidelines on how workers' comp insurance has to be processed, what taxes have to be filed within that state.
Right.
And so it gets very complicated when you have a multi-state type of risk, where that makes us a lot different than what a regional PEO.
Let's cover that a little bit more when we come back after the break. Like, what do you do when you decide you want to cross state lines and your insurance policy doesn't cover it? We'll talk about that when we come back here on Tampa Home Talk. Our off-air number, if you're one of these higher risk businesses and you want to get some information and maybe dig in and see how we could possibly save you some premium on your insurance, 813-377-2775. Again, you can call or text, whatever you're looking for, at 813-377-2775. We'll be back in just a moment.
And welcome back to Tampa Home Talk. This is Adam Talley with
You forgot
Talley
who you were,
Insurance.
Adam?
Yeah, I had to think about it for a second. It's been a
who you
long
were.
time since I've been in studio. It's been at least 2 weeks.
I know. I don't know where you're at.
It's
You're not
okay.
here.
Yeah, I know. But either way, this is the insurance hour. It's been great. I love it. We're talking with Brian
He's
from
gonna
All
geek out
Insurance
this
Underwriters. It's great. He might even help me out with a policy here. So we're
there
excited.
you go.
Doing business this
I
morning.
just brought you another partner.
I can't wait. I'm loving it. So anyways, we're talking all about PEOs and how they can help you if you're a business owner, and really it takes a lot of that admin work off of your back. You don't have to do quite as much every single day. You can work on your business, not in your business.
It's affordable, a lot more than most people would think, right? And I think you guys are really competitively priced.
We are. So where we sit in the marketplace, not only do we offer these PEO services directly to the public, more often than not, what we do is we're educating insurance agencies, CPAs, and other people that are working with business owners on a regular basis to really understand the product, because we deal by volume, if you will, and because of that, we operate nationwide, and looking at a construction company, a lot of times we receive a submission from an insurance agent because there's an obstacle that they've come into. The company's had a bad year with claims, or they have a situation where they've had some problematic employees and don't know how to address it, and we come in to that type of situation, look at it, and truly understand the account, and not just what's happened over the last year, but really dive into what's causing their issues. So we can consult with them and say, okay, let's create a path that's going to get you from this price, let's say $10, to $6 over the next 3 years.
Well, you improve their bottom line, right?
do.
If you can increase their or decrease their insurance cost, then that increases their net revenue in their pocket at the end of the day. I am curious, though, going back to that same scenario that we talked about where someone is crossing state lines, right? Here in Tampa, probably a bigger deal than if you live in Pensacola. I imagine that would happen a lot more often there. But how does that work if somebody wants to cross state lines and still keep their insurance? What are you guys doing?
Well, they have to have an insurance policy that would allow them to do that. And if you're, depending on what industry you're in many cases that becomes difficult. From an employee PEO, professional employee organization, what we do is we operate in 47 states. So we have a master workers' comp policy that covers all of our clients, and it's already endorsed and insured in those 47 states. You had a question?
So Alaska, Hawaii,
not classroom style,
and what's the third state?
Probably California.
That's the ones you don't write in?
Monopolistic states where the state controls the workers' all of the insurance for that state.
Oh, the state's insane. Got it. Yeah.
Which states are those?
So you've got Ohio. There's a few states.
Ohio.
Well, there should be 3. So I'm just trying.
Right.
I did not. I wouldn't have.
He was
thought.
asking what 3 states you're not in.
Yeah.
Oh, you're catch me off guard here. We'll talk about that after the show. But there's 47 of the states that we can write in. Even in those states, we can still provide options for you, but it's not on our master workers' comp policy. So
I do like how you guys are willing to craft a little, different plan based on that particular company's needs and whatever they have going on. And, I wish there was a similar solution for lenders, honestly, for mortgage lenders, but there's not. And now you got the whole Frank Dodd thing that adds to the layers. But so many times I see stuff that doesn't fit in the Fannie Mae, Freddie Mac box, so they call it non-QM. And honestly, it's not a big risk loan. I feel like they should definitely be taking it. So we just don't see that gap, though, in the mortgage world. It's like you're in or you're out.
Right. So we don't always do it with high risk accounts. A lot of times it's complicated payrolls. Like, for example, Tampa Bay Lightning, go Bolts. They use a PEO to handle their payroll. They don't use them for workers' comp insurance. So customers come to us for different various reasons. Maybe it's just a complicated payroll. It's an HR compliance. They want employee handbooks. They want one centralized location that they can address a lot of the employment related items that they deal with on a day-to-day basis. A 4-man company is going to have different needs than a 500-man company that's growing. So as a business owner, they have to make a decision. Do we want to invest in resources, time, and employees, and educate them on HR,
to a certain point you have to hire
employee
them.
practice, liability type of stuff, or do we want to outsource that? Because a PEO can basically do that at a fraction of a price.
They outsource the HR part too?
Well, they should.
You can.
Yeah.
Wow.
So that's what a PEO does. So they're really there to handle, like I said, all the non-generating revenue task. Outsource that to a PEO. Focus on things that are going to generate revenue for your company. Salespeople, marketing, customer service.
Yeah.
These are the things that make your company grow and keep your customers happy.
It makes sense to me. And so you also do a lot of work with Rob, right? Like, are you guys kind of interconnect some way? And
We do. So we partner with basically the highest level professionals in these different aspects, if you will. So on the insurance side, we're negotiating workers' comp policies with millions and millions of dollars in premium. And then we're passing those discounts on to our consumers. That's what allows us to be competitive. So we're always seeking new partnerships in ways that we can help our customers save money, control their costs, and reduce their costs. And that's where Rob comes in. He has merchant service company. We've interviewed him, Intense. And right, yep. And we found that he's one of the best in the industry. So we formed a partnership for him to come in, and it's just one more product, if you will, that we can offer to our customers to reduce their cost.
And Rob, just for those listening at home, what is merchant services? If they've never heard, I feel like if you're not a business owner, maybe that's never crossed your path before.
Good morning, everybody.
Morning, Rob.
Like,
Rob, and Rob, by the way, say your company as well.
Our world, we don't even use it, so
Right.
of course.
Yeah, so my company is WinStar Payments, and yes, we are a merchant services, but more than a merchant services company, we're a payments company, locally owned here in Tampa. I'm a home Tampa product, been here for 43 years, grew up here, went to college, high school, all the above here.
Where'd you go to high school?
Chamberlain High School.
Oh, me too.
Class of
Look at
92.
that. We graduated the same year.
Oh, I'm surprised we don't know
That's
each
weird.
Pull out the yearbook. Let's see
I know,
it.
I got what
other. I don't want to look at the yearbook from the 90s. Bad hair.
Well, I always say that's back when Chamberlain was a good school, right?
Yes, of course.
Like, I don't know about you, but like where I used to live, it got rezoned for Gaither.
It did. I lived right on the border of Ehrlich in the Carrollwood area.
Yeah,
by the
so you
country
would have
club
been
over there.
rezoned for Gaither too.
Yep, right after.
So merchant services. So we work with that for Tampa Home Talk because we take credit cards there, but on the mortgage side we don't, or on the real estate side we don't. Everything's like collected through a title company.
Yeah.
So we don't do any merchant services there, but like Leo does, right? You collect payments for your inspections.
Yeah, we use credit cards all the time.
Well, maybe Leo, we should talk after the show then.
So is that the main thing that you do? Like, what type of services do you offer merchants? Is it just credit card collections, or you do other stuff?
So mainly merchant services is our core business. We have a little north of 1,000 local merchants in the Central Florida area. Several different industries we cater to, but we're heavily restaurant focused here in the Tampa area. Our investment group is from the restaurant industry and has a background there, owning Ford's Garages, Yeoman's, and some of those properties.
Are you also doing the point of sale machines and everything for them too?
So we're a pretty diversified company. We have 3 or 4 different point of sale offerings that we sell and market directly to merchants. And in today's world, in the payment space, everything you'll hear integrated payments, like you'll see Toast, and we are a future point of sale dealer. We have a product called Exit Touch, and we sell and market a system called Clover. So all of that.
And what the heck does all that mean to the person listening?
Well, it means they can come to us for all-in-one services. So they can get a point-of-sale system from us to take credit cards. They can take payments through us to do merchant services. We also offer a gift and loyalty product, too, that we own and operate. It's our own platform. So if somebody wants to know how many times somebody comes into their bar or restaurant, we can tell them that. We do text marketing, email marketing for that, and it can be card or cardless. We do.
That's great. Can we talk about an example of what that would be on how a customer could reward their regular customers and maybe create some incentive for new ones?
Yeah, sure. So I know if I'm a business and I want to track my top 20 spenders, right? So if I go to a bar 4 times a week, they're going to know that I'm in there.
You have a problem. I'm
right. I mean, if I'm spending $1,000 a day in the bar, that's a problem. But anyway.
Hey, let me put it to you this way. the Hard Rock, I'm sure they know who their customers are.
Oh,
right?
yeah.
Absolutely.
Yes,
okay,
absolutely.
so how is this any different?
It's not. It's exactly the same thing.
It's really not. It's just a loyalty. It's a way for you to track your top spenders and market to them to get them coming back more. So
what kind of things do you do to market to them?
So we provide a database for them to capture the data. So if I walk into a restaurant, I sign up for their loyalty program. It goes into the database, and they have my email and cell phone, so they can market to me when they're having specials on a Friday for 2-for-1 burgers or happy hour for certain kinds of drinks or whatever the case may be. So
it's good for restaurants because they can invite people in during their slow times. Like if a Tuesday evening is their worst day of the week, you'll see this where people offer free kids meals.
That's right. Very similar. So it's just knowing your customers and, catering to your better customers and keeping a database and a list of who they are and how often they come in.
That's a good question. When you say know your customers, and when I think about that, it's not something that restaurants really get to dive in deep and do very often. And so if it were me, and I don't, sometimes you get better information from somebody that's never been in that world like me. So if it were me and I was a business owner and I owned a restaurant, I would almost give them incentive to fill out a questionnaire so I could get more information on what was most important to them. Then you know how to market to those people.
Right. Absolutely. And
do they have kids or do they not have kids? Do they drink alcohol? Do they not drink alcohol?
Right.
Who doesn't drink alcohol?
Well, my husband doesn't drink.
Big fan of the stuff.
I know, me too.
It is Friday.
Yeah. So, all right. So what else? What other things? And one of the questions that I know we had lined up for you guys are the different rates and fees associated with cards. And I will tell you, not all merchant vendors like you are the same. I know when we originally started radio, we had to collect credit cards, and we had never done that before. So we just signed up through something that came through the mail, and boy, did I not realize how much we were paying them.
Those fees add up.
Yep. So
it's a lot.
So there's several different fees that are associated with credit card processing. The main ones come from the 4 card brands, Visa, MasterCard, American Express, and Discover. So it's very important that businesses understand, and we do a good job of consulting our clients and explaining to them where the majority of their costs come from, which are the 4 card brands.
Which ones are most expensive? Is there some that are more than others?
Well, yeah, each card type has a code or an MCC code. We call them a merchant category code or an SIC code attached to it. So I know that if I bring my corporate card into a client, to a merchant and use it, it's more expensive for the merchant to take an American Express card because the rates are sometimes north of 3%. Wow. Same with the Visa corporate card.
So that comes out of the business owner's money they receive?
That's correct.
Yeah.
And the only reason that I bring this up is because we have programs for merchants that enable them to pass on the fees to the clients.
Hold on, we're out of time. We'll be back in a second. Stick around.
Welcome back to Tampa Home Talk. This is Adam Talley with Talley Insurance. I'm just so excited they let me bring us out again. And if you have any questions, please call or text at 813-377-2775. That's 813-377-2775. Leo, what was that again?
You can call or text.
813-377-2775.
Text insurance. And we'll fill up your afternoon with all sorts of fun tidbits.
For people listening, take credit cards. How can we save them some money, reduce their costs, and leverage some of those credit card fees?
So we have several different programs to help merchants or our clients reduce costs. One of the largest ones in the industry right now that we are representing and marketing very well, have a lot of clients on this program, is we offer a way for our clients to pass on the credit card, or merchants to pass on the credit card fees to the consumer. So if you're a business, and I'll use a nail salon as an example because we have a lot of those running on this program, and you have a $100 nail problem, which my daughter does.
Wait a minute, $100 nail problem. Come on now.
But so in other words, if you ran up a $100 tab at the nail salon, which can be expensive, and you don't want to pay the 3 to 3.5% fees, we administer a program that helps our clients pass on those fees to the consumer. So that $100 would have a separate line item on the receipt of $4 because it would be 4%. So they would receive a bill of $104 versus $100, but at the end of the day, the merchant wouldn't have to pay the credit card fees.
What does that say on the receipt, though?
It's a separate line item that represents a service charge.
So it just says service charge?
Yeah, line items that way. And then there's signage that the merchants or our clients have to have in their storefront or restaurant or whatever the case may be that lets the consumer know that they have
I would be the one to say, I'm not paying that.
Yeah, well, believe it or not, it's very, very common in the industry.
So, Rob, over the course of a month, how much would that save typically a nail salon?
Depending on, using a normal nail salon.
That $100 is a real number, I'm just saying.
I know it is. I witness it every 2 weeks with my daughter. In a business like a nail salon that does somewhere between, let's just say, $35,000 and $40,000 a month in credit card processing, save them $1,500 to $2,000 a month at times. So it's pretty significant to the client.
That could pay their rent.
$20,000 a year. That's a lot.
And the client has the option to administer that charge or opt out of it. So they don't have to charge every client. So if you come in complaining about paying the extra $4, you don't have to pay it.
So let me ask you a question. Yeah. Didn't something change in this realm like several years back? I thought I heard.
Yes.
Yeah, what was that?
So I think you're relating to EMV, to where the chip.
I don't know what any of that technology is, but I remember something changing with merchants, and there was a big thing about it.
Oh, it was a chip.
Yep, the EMV chip.
Okay.
Yeah. So EMV's been around for a while. It was very prevalent in Europe before the United States, but now it's here, obviously, and the method to the madness behind it is when you go into a business establishment that takes credit cards. Now, as you can see, everybody's dipping the chip in the terminal or the point of sale system, and the reason is a lot of the laws have changed and compliance and all that good stuff in our industry, and the reason why they're dipping the chip now is because the bank used to have liability who issued. The issuing bank who issues the credit cards to us that we go use it to purchase whatever we're purchasing, they used to own the liability of that transaction if a dispute or a chargeback would happen. So that shifted during the whole EMV environment to the merchant. So if the merchant is not dipping the chip at the point of sale,
dipping the chip meaning putting it in the slot. So
Yes. So if it's not reading the chip at the point of sale, the merchant becomes liable if I do a chargeback or dispute the charge.
So they just take a credit card versus inserting.
They have to insert it.
What about the gas pumps where there are so many skimmers and people like me? I always use my credit card.
Gas
always.
Stations are starting to do chip dippers.
Yeah. So I always use my credit card at the gas station because the skimmers are everywhere.
But what about
they have those things on the front you can just touch it.
What about the cards now that you don't even have to? Yeah. You don't even have to put your card in.
Does that count?
You take your watch and you wave it in front of the Publix thing, and you.
So that's contactless payments are becoming a big.
Is that considered chip dip or no?
Yeah, I mean. It can be.
Chip dip.
Is that what you said?
That's what you said.
Was that what you said?
We call it dipping the card because it's just an industry term.
I could have swore he said chip dip.
I said chip dip.
Well, it is football season, right?
That's just what I heard. Okay, got it.
Rob, explain kind of how that helps reduce the liability for business owners as well, because I've heard of situations recently over the summer where there was a hotel, and this is stuff that we want to communicate to our consumers, our clients in the PEO industry, where the liabilities stand.
Sure. So in the restaurant and hotel space, they're a little behind on the dipping of the chip or the EMV technology as we call it. So one of our larger clients that resided on the beach, and we refer to it as friendly fraud, right? So if I walk in there and they run a tab for $500 and they just authorize it for whatever, like they do behind the bar, and then they hand you the card back, they're not dipping the chip. So they're responsible if I leave the bar and I call my issuing bank and say, I don't want to pay this $2,000 bar tab, I never did it. Well,
why are they dipping the chip?
They're not dipping the chip in that environment.
Why?
Well, the restaurant space has it's catching up now. In the initial stages, they had all this money invested in their point of sale systems, like the larger groups. So it's a very, very expensive upgrade for a business to administer those terminals. And there's what's called.
Until you get hit with several of those tabs during spring break, then it's probably a good time to change.
Yeah, this one, somewhere in the neighborhood of $150,000 of friendly fraud, 3 or 4 years back. So
how much does it cost to change?
Not that much.
I like Europe, where each waitress or waiter has.
They just bring it right to you. I love
terminal.
that.
Yeah.
Yep.
The card never leaves the table.
Yeah, pay at the table is very common now, and that's run on wireless terminals. So we have the ability to do that too.
So one of my favorite appraisers is behind you, so you probably didn't see her walk in, Adam. And since she's here, I wonder if she was just listening and popped in, talking about these differences in appraisal. So maybe we can grill her a little bit next hour. And do you still want to throw in your tip? Or?
Yeah. Oh yeah. We'll grill her and tip. It'll be great.
All right, so what do you got for insurance? Is your soapbox going to go longer than the time we have?
We could probably knock it out pretty quickly today. It's no soapbox. It's just really another general warning to everybody that's out there when it comes to sinkhole homes. Okay, I had a realtor this started late last week. I got an email on Thursday. Hey, I need a quote. Blah blah blah. They were trying to close this week, so first and foremost, go with somebody like Katrina who's going to prepare in advance.
We're not going to do it 2 days before closing.
For something like you can't. That's the problem we're in. Policy still isn't issued because when it comes to sinkhole homes, we really have one option, and that's Citizens.
Ew.
And Citizens doesn't want to play ball, right? So the amount of documentation that we have to submit for a sinkhole home is extraordinary. So you could be delaying your closing and all this other stuff even if you have all your I's dotted and your T's crossed, because it just takes that long, and they don't expedite anything for anybody. They don't care if you're trying to close.
Unless somebody digs, it could have happened 2 or 3 owners ago, and maybe you didn't even know. It could happen.
Exactly. And now you don't have have an engineer report, and you could be
real
SOL.
Let's talk about that next hour maybe a little, because there's a lot to cover there. All right. This is Tampa Home Talk.
Yeah.
813-377-2775. That's 813-377-2775.
Rob, Brian, thanks so much for joining us.
Thank you for having us.
We appreciate
it.
Insurance Hour.
We'll be back for hour number 2, so stick around. Back in a moment.